Alright, so let's get right into it. If you've been paying even a little bit of attention to the stock market lately, you've probably heard the name Opendoor Technologies, or seen its ticker symbol, OPEN, flashing across your screen. This company has been on an absolute tear, with its stock price doing things that make even seasoned investors raise an eyebrow. It seems like just yesterday it was a relatively unknown player, and now it's the talk of Wall Street, with its valuation soaring into the stratosphere. The big question everyone is asking is simple. What is going on? Is there still time to get in on the action? Or has that ship already sailed, smashed that like button and headed for the moon? It's a classic story of market disruption meeting investor enthusiasm, creating a perfect storm of volatility and opportunity. The reason for all this buzz is that Opendoor is trying to fundamentally change one of the oldest and most frustrating industries out there, real estate. For generations, selling a house has been painstakingly slow, complicated, and expensive. You have to find a real estate agent, get your house ready for showings, deal with endless open houses, negotiate with potential buyers who might back out at the last minute, and then navigate a mountain of paperwork. It can take months, and the uncertainty can be incredibly stressful. Opendoor looked at this entire ordeal and basically said, there has to be a better way. They went out and built it, creating a platform that promises to make selling your home as easy as ordering a pizza. So, how does this whole iBuying thing actually work? Let's break it down surprisingly simple from the homeowner's perspective. Imagine you want to sell your house. Instead of calling a local real estate agent, you go to Opendoor's website. You type in your address, tell a few basic facts, number of bedrooms, number of bathrooms, square footage, recent upgrades. You might upload a quick phone video walkthrough. All of that takes maybe 10 minutes. Hit submit. Then the magic happens behind the scenes. Within about 24 hours, Opendoor sends a preliminary all-cash offer. It's a data-driven valuation from their proprietary algorithm. The algorithm looks at recent comparable sales, the comps. It checks local market trends, and it factors the specific details you gave. If you like the initial offer, schedule a virtual assessment, or schedule an in-person assessment. A rep verifies condition, then Opendoor gives a final firm cash offer, no obligation. Now for the most important part, how does Opendoor make money? Not just buying low and selling high, primary revenue, service fee charged to seller. Fee today, about 5% of sale price. That's similar to a traditional agent commission, 5-6%. Opendoor's pitch, convenience, not necessarily lower cost. Service fee covers holding cost, property taxes, holding cost, insurance, holding cost, utilities, holding cost, maintenance. Service fee covers selling costs like buyer's agent commission. Service fee covers market risk between buy and sell. The fee is a built-in buffer on every transaction. Second revenue, home price appreciation. They do light repairs and improvements, plus professional marketing to lift sale price. Example, 1% monthly price rise, holding 2 months equal sign captured appreciation. Finally, Opendoor is expanding ancillary services, title insurance, in-house, escrow services, in-house, mortgage lending, in-house. So what exactly lit the fire under Opendoor's stock, causing it to climb so dramatically in recent months? Well, a huge part of the story has been the broader macroeconomic environment. The real estate market has remained incredibly resilient. Interest rates have stabilized from recent peaks. Demand continues to outstrip limited supply in key markets. This creates a favorable backdrop for Opendoor's business model. A stable or rising housing market minimizes their biggest risk, being forced to sell at a loss if the market turns south. Investor confidence grew as Opendoor navigated these conditions. Another major catalyst, impressive execution and operational improvements. Big question used to be profitability. Margins in iBuying are notoriously thin. Over the last several quarters, they've made progress managing costs and streamlining operations. They've become much better at accurately pricing homes with their algorithms. They've reduced spending on repairs. They've shortened time to resell properties. That efficiency led to better than expected financial results, showing Wall Street a clear path to profitability and persuading skeptical investors. We've covered what Opendoor does, how it makes money, and why the stock has been on such an incredible run. Now we get to the million-dollar question, or perhaps the multi-billion-dollar question given its market cap. As of today, September 16, 2025, is Opendoor stock still a smart buy? The case for optimism is strong. Opendoor is the undisputed leader in iBuying. They have a significant first-mover advantage and strong brand recognition. They're tackling a multi-trillion-dollar US real estate market ripe for disruption. As for me, I'm watching it very, very closely.